Okay, let's talk about what I'm seeing as the next big finance opportunity. Now, right now, there's legislation, I believe it has passed the House, that would allow just about anyone to become an accredited investor. Now, before we get to what that legislation is going to do, let's just remind you of what an accredited investor is. It's essentially a term that was created to identify a savvy investor and allow people to invest in other types of vehicles that aren't public equities like stocks and things like that. And the way you become an accredited investor today is that you have to meet that definition. And that definition revolves around your net worth and or your income. And so there's two ways to meet that. You can have $1 million in net worth. Now you have to exclude any equity in your home. So that's why a lot of Americans don't meet their accredited investor definition, because most people, their largest asset is their home. So when you're excluding that from the definition of an accredited investor, it makes it hard. So you have to have $1 million in net worth or make $200,000 a year for the last 2 years as an individual, or $300,000 as a household. So you can meet one of those two definitions and you can be called an accredited investor. And what that does is that opens you up to be able to invest in lots of other things like private equity, some various hedge funds, all kinds of alternative finance. And that really is, in my opinion, the next big opportunity in finance, is moving into these alternative investments. You know, all of us understand that you can invest in the stock market, you can buy bonds, you can do all those things. The SEC then changed regulations to allow folks, everyday folks, to invest in startups. So you can do crowdfunding and do all these different things. There's regulations that allow you to invest in startups as long as they're only raising a certain amount of money or a certain number of investors. But most alternative investments and alternative vehicles require you to meet this accredited investor definition. And so this new legislation is basically going to open it up to, if you can pass a test, then you can be called an accredited investor. Now, that doesn't shock me. And what I'm going to do is I'm going to run through a couple of reasons why this is a really good idea, and then a couple of reasons of why this is a really, really, really bad idea. Now, let's start with why I think it makes sense. And so the reason it makes sense is the idea of an accredited investor was to protect people who were not basically, they assumed that if you didn't have a high net worth or you didn't have a high income, that you weren't versed in these alternative investments. And so it was to protect people when it came to investing in private businesses. And if you pass a test, we can assume that you understand what you're getting yourself into. And so that would remove that requirement. And that's one reason I think it makes sense. Another reason a test makes sense is one other way to become an accredited investor before this legislation goes through, beyond the net worth and income requirements, is if you're a financial professional and you have certain licenses, like the ones I've had in the past, like a Series 7 or a Series 63, a Series 65 as an RIA. If you have passed those tests, then you are considered an accredited investor because you've studied various finance vehicles and investment vehicles. And so they assume you're savvy enough to invest in private equities, private capital, private lending, private credit, that type of thing. So that's another reason this makes sense. If it's okay to pass a certain insurance or financial professional license, why not just have an accredited investor license and let people pass that and invest in private equities? The other reason it makes sense is I don't think it's fair that these opportunities just go to accredited investors, people who have wealth. I think your average everyday person should have the opportunity, pending a few caveats, to invest in these things. And if you don't understand what this opportunity really means, let me just say that I listened to Ed Mylett's podcast with Tony Robbins recently, and Tony's most recent book talks about the opportunity around for investing in private equity, those types of things. I can't remember the name of the book, so I'm Googling it real quick. That's right. It's called The Holy Grail of Investing. And in it, Tony talks about all these alternative investment opportunities. And if you go back and you listen to the Ed Mylett podcast interview with Tony, Tony talks about the average returns of these alternative investments like private equity, private credit, those types of things. Keep in mind, just as a reminder, I've been involved in that for a very, very, very long time. So I got immediately where Tony was coming from. But just to say that, you know, if you look at the S&P 500 index, people always talk about investing in that because it gets you a very secure return. And it has. I think it's averaged somewhere between 8 and 10% for its entirety. in terms of an average, not every year, but just an average. And so 8 and 10% is a really good return. But private equity, at least according to the stats that Tony was quoting, was averaging 14.5%, sometimes as high as 20%. So that's another reason I don't think it's fair that these opportunities are just for people who meet certain wealth requirements. I think we should open it up to everyone as long as they know what they're getting themselves into. And the fourth reason I think that it's a good thing to expand the definition of our accredited investors so that we can get more capital in the market. So right now you've got certain limitations on the amount of capital because they're limiting the people that can be participating and deploying capital to startups and other businesses that need this type of capital. If we open this up to other people who just have to go pass a test, then we're going to have even more capital available for these folks to go out and access. Now, I've got 3 reasons why I don't think it makes a lot of sense. And these basically all revolve around the idea of just being super careful and making sure that people don't get themselves in trouble, because investing in these types of opportunities requires a very specific skill set. And so not everyone should get into it. And I'm going to tie this to the opportunity around this here in just a second. So 3 reasons I don't think it makes sense to expand this based on a test. Taking a test does not necessarily prove that you understand how to analyze private investment opportunities. So I want to be clear about that. It may prove that you were able to learn the material. It may prove that you understand the material at a basic level, but it doesn't mean you understand how to analyze private investment opportunities. That is totally, totally different than analyzing stocks and other things. So a test doesn't necessarily prove that. The second thing is I do suspect we'll see more fraud because of opening this up to other people. So what I could see happening is someone opening up an investment fund and then raising money from newly accredited investors who didn't meet the traditional definition. They don't know how to do due diligence on that fund or that investor. And so you get in and there's some fraud that occurs along the way. So I think that could potentially be a problem as well. The last reason I see this not being a great thing is kind of ties to the first one. It doesn't prove you understand how this works, but really analyzing the ongoing performance of a private investment opportunity is totally different than a stock. So with stocks, you look at things like, yes, you look at their financial performance, but a lot of people will look at their price to earnings ratio as a guidance if that stock is a good investment. They'll look at all kinds of other public equity metrics and criteria. When you're analyzing how well a business is doing, a private business that is not required to submit to certain regulations, it just takes a totally different skill set. So I could see where we will see lots of new accredited investors getting themselves in trouble because this is just the hot thing to get into, and they start investing and they don't really know what they've gotten themselves into. The good news is that all equates to a huge opportunity for you. And here's what I mean by that. I've got a course, my most popular course, that teaches people how to start a commercial loan broker business. Working with lots of folks right now, lots of opportunities to help businesses obtain capital. But not every business is going to need a loan. Not every business is right for even startup investors. Having access to private equity, private credit, those types of things allows these businesses to get other types of capital. And there's going to be a need to have folks like myself who know how to get them to that capital and how to make sure they're using the right types of capital. There's going to be an opportunity there. So I've created a new bundle. It's called the Funding Consultant Toolkit. It takes you through various courses of mine to give you a base understanding of how to help businesses obtain any type of capital. It doesn't have to be a loan, could be startup investors, private equity, all those types of things. And I'm personally looking for people, 3 or 4 people, it's about all the bandwidth I have right now, to mentor in this space to help you start your own funding and financial consulting practice. If that sounds interesting to you, I'm going to put a link in the description, or you're welcome to reach out to me with questions. I hope this is helpful for you. I am excited about expanding the definition of accredited investor. I just think folks need to be careful. And if that's you, please, please go into this very, very carefully with lots of due diligence and lots of study. Take care.